Okay, so we're into a new year, and what I've got up on the screen here is the DXY, which is the dollar index. So for those that have been following along, dollar index is really what I look at. And EU acts inversely to the US dollar, so because it's euro versus the US dollar. So whatever DXY is doing, euro versus USD is going to be doing the opposite. Same with GPU. And then if you get other currencies, so like USD, JPY, the USD, JPY will follow similar to the USD index. So when I look at this, I'm just looking to see what's been happening. So basic market structure. So we say we've got a high, lower high, there, sorry, lower low, lower high, lower low, lower high, lower low. So there you go, that's a downtrend where you continually make these newer break structures to the downside. So you've got a low there, that's like your protected low. Once it comes up, that's a failed swing. We failed to get back above here, and then we go on to make a lower low. So that's the first basics, really. So we'll see, I mean, this is going all the way back to 1968, because I've got this set to a 12-month period, so each one of these candles represents a whole year, and price is fractal. So within these candles, there's the same sort of thing. There'll be a trend within those as well. So I like to start on the higher time frame, and the reason that I'm starting on the higher time frame here is because we've just closed the last year and we're into a new year now. So this was DXY's last year candle, which was a really small sort of candle when you consider this the year before, 22, here was 21, big candles, and this has closed inside the body of this candle. So that signals that the next candle could be quite an explosive candle. So for me, on a yearly chart here, you'll see, so from this low to this high, again, anyone that's been following will know that that's a fair value gap, and it's actually a SIBI, which is a sell side imbalance and a buy side inefficiency. So there's not been any buy side offered in this area here. And similarly, so on the way up, you had this here, which was bullish going up the way. So from this high to this high, there's a gap. So if I just draw on here, actually, I'll put this on in yellow. So from that high there to that low was an imbalance. Now, in actual fact, what's just happened this year is that's actually become a balanced price range. So this is a bit more advanced, but the fact that this price came up through here, closed back down inside, and then this one's come and tapped in here again, this area should have acted as resistance, and that's what's happened. So it come up this year, hit up into this area, just up in there, and then we came down lower and then we closed back in. So like I say, that's a bit more advanced, right? But in there, so I'm looking for next year's candle. So on this chart, I'm anticipating that this is going to be a large down close candle. Now, that's not just from looking at this chart. That's looking at the macroeconomics. It's looking at the economic data that comes out. So it's looking like inflation's basically under control, and in actual fact, probably deflation is a bigger worry. And I think that's why the Fed are talking about a pivot, and the market's reacted to that. So not so much the US dollar and the euro really, but like so the Nasdaq and the S&P 500, they're into new all-time highs. So they're more forward-looking. So they hear what the Fed are talking about in America, and the markets react to that sort of stuff. So it's definitely looking like there's a pivot on the way. So everyone will know that there's been interest rates getting raised for the past little while. That's how they curb inflation. So basically, strangle the retail traders or retail people, try and just really tighten the noose on the neck and stop people from buying, because ultimately that's what causes inflation. So it's supply and demand. And if you can stop people from buying, consuming, then there won't be any demand. So then the supply is greater, and that means prices come down. So that's pretty much been effective. And when COVID first came about and inflation started going high, the Fed were always saying it was transitory, but it got quite high and they had to react. And it does look like it is kind of transitory. It's not necessarily sticky. It seems to be coming down quite fast. And I think the Fed know that as well. So it's looking like, from an economic standpoint, that the rates are going to come down. The US dollar, it's had its run up. It's then back up into this price range that we talked about, and it's rejected. So to me, there's a big down close candle coming for next year. What's going to happen with the Fed as well, and this is the business cycle, so there's going to be stimulus. They were taking money out of the system. That's what they were trying to do. Quantitative tightening. But now, as the economy starts to recover and they put you into a recession almost, it's been a rolling recession this time. So they'll start to print money again. And ultimately that rolls into the markets, that rolls into crypto, it rolls into the Nasdaq. So all these asset classes are driven by the Fed liquidity, but global M2, which is the global money supply. It's all linked. So as money gets printed, it ends up coming into risk assets, and ultimately that's what drives the risk assets. So for me, on a yearly instance, I'm looking for basically these lows. We could potentially see that being attacked by the end of the year next year, because it's pretty clean in here. That's an equal low, and then you've got an inefficiency in here as well. But that's $80, $90. So we'll see. It's probably quite a reasonable move to come into here. And that's what I'd probably expect, which means euro, if I'm saying inversely, then I would anticipate euro back up above 1.2, probably back up in here as well. You're probably talking 1.25 euros to the US dollar. So that's quite a reasonable move as well, especially for one candle. But definitely these highs, I think, get attacked this year because the macroeconomic side of it. I mean, I probably wouldn't be thinking, oh yeah, that's what's going to happen, but because I understand the Fed, how the Fed can impact the markets, and the fact that interest rates are going to start getting slashed. It's going to be like a ball's being held underwater, and it's trying to come to the surface. So as soon as they start slashing interest rates, that's just going to burst to the surface and it's going to take off. And that's what I said when I was saying you've got this, so the opposite of DXY, but in here we've stayed inside this candle's body this year. So to me, that's a big move for the next candle, and that's what makes me think we're going to come up into this area, maybe beyond as well, but certainly up into there anyway. I feel that's definitely on the cards. Now, I've just marked up balanced price ranges that have been respected. So this SIBI occurred in 81. Okay, price passed through it in one big swift candle. That's what makes it an imbalanced price range. It got balanced here when price came down into here. It got balanced, but price then came down again, filled in this area, pushed away again. It left another imbalanced price range. So you've got this SIBI followed by a BISI. So sell side imbalance, buy side inefficiency. This candle going up here is a buy side inefficiency set, a buy side imbalance, sell side inefficiency. So this wick here is actually what came down and balanced this price range and then pushed away. So you can see it's like a stepping stone, a ladder sort of thing. And in actual fact, as I look now, you've actually got here to there, and that's a balanced price range as well. Okay. So notice how it got respected here. It come in, now the body of this candle still closed up and above that balanced price range, but we did dig down into here to balance this price range as well. Now, again, people might not have followed me, but this is all algorithmic theory. The markets are run by an algorithm, and that's what's happening here. This is what I talk about, and this is how I trade based on algorithmic price theory. So these are the things that you see, and this is why the wicks at the bottom of these, they'll do the damage. So that comes down in here, but bounces straight back up. Now this was a yearly candle, so don't get me wrong, let's just put it to a week. And that, each one of these represents a week. So you'll see that actually it took a while to come down here, get into that area, and then push back up. But that's what happened in 22. And now we're into, well, 24. So how will I use this information? So I forget about these other balanced price ranges. That's just for context, really. Okay, I'm looking at trade each day, scalping. So just having that higher time frame context and understanding where we're going is really what I use that for. So these are the highs that I mentioned that I think's going to get attacked this year, and potentially this high. There's a lot of sort of failed swing points in here as well. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So as we come up here, there'll be liquidity sitting all along here that'll get swept. And in actual fact, I'm saying price is fractal, which just means whatever happens on one time frame happens on all time frames, basically. So as you see here, you see this is a weekly time frame. Okay, so this comes down here, it bounces out of there. That's a change in state of delivery. So price is now moving higher, but then you've just kind of got the same. So look, here drops down, bounces out, and starts moving higher. So on, this is a weekly time frame. On a daily time frame, so think about this, there, back up. We're going to come for these highs, okay? So we've went there, back up, and now we're going to come for these highs. The price is fractal. If I go down to a daily, you'll see similar sort of thing. Bounce down, chop back up, and then move higher. So for me, the draw on liquidity just now is this high. That's my aim just now. I do understand that on a higher time frame, we are going to move higher still. So that just allows me to get in line with institutional order flow. So we're into, now there's a concept called the power of three, which is each candle that will open at a certain price, the body. So a single candle, if I go back up to a 12-month, a single candle on here So I'll take this one, say the year of 21. So you've got the open price up here. You've then got the tail up at the top in here. So that tells us that it opened, it went higher up to here. This candle here, by the way, the black down close candle. So opened, it went higher, and then it reversed, and it came down, it had all this play, and then it wicked all the way down to here, and then it closed the year up into here. So that's what you call a power of three. So it's like, it's open, in this case, open, high, low, and then close. In the bullish scenario, it was an open, a low, a high, and then a close. So I could probably denote this for you. So let's just take this here, for example. Okay, so I'll show you on this candle here for the year. So I'm saying this here was the open. It was a down close candle. It opened here. So we'll take that and we'll write here open. Move it to the right. Okay, the open. Then this was the high. This was the low. Down at the bottom of the wick is the low. And this one here was the close. Put that to the top. Okay, so what I'll now do is I'll move down into a 1 month time frame. Okay, so here was where we opened. You'll see that there was a move up higher. We made the high in May. So opened in January, price pushed up higher in May, hit here, and then price traveled down to here. It made the low in December, just here, and then it sat back in the range and closed. Okay, hopefully that's clear enough. So that's called an open, high, low, close, but it also ties in with the strategy of the power of three. So a power of three is an accumulation. You get a manipulation leg, and then you'll get a distribution leg. So it'd be like an accumulation in here. The manipulation, people go long, break out above this high, big bullish candle. Everybody's going long. So that's the manipulation, and then it distributes lower. Okay, so you can tie all these things together. And interestingly, this is usually what happens. So you'll notice that was the open, and look how this body candle in September comes down, it respects it, it bounces out of there, comes back down, and then it sticks around this area because the algorithm refers back to these things, and then it eventually moves lower. So we'll come back and I'll take that replay off. So the question that I've got really is from a monthly perspective. So the thing I've just said about an open, I'm expecting bullish price action. Okay, I'm expecting for the year euro to move higher. So as we open up the new year, I'm looking for the open, I'm looking for a low, and then I'm looking for a high for the end of the year. So because of the economic data that's coming out, you'll get 1 month. Okay, so you can get a month like, there's a good example. Was there a big wick and then it moves in the opposite direction? There's not really any great examples here, but it's trying to determine how low we're going to come at the start of this year to create our open our low for the year, wherever that might be, and then pushing on for the high. And that's what I anticipate. I think it will come a lot sooner. So the example that I showed you there, the high came in like June. So January and then June was the high, and then it came lower because of the macroeconomics just now. Now, this is the current situation. We've obviously got a Ukrainian war. We've obviously got Israel at war as well. So as long as all that stays relatively, nothing escalates drastically there, then I see this scenario. Of course, there's black swan events that could happen, and it throws everything out. So that could happen. But in a scenario where things are continuing the way they are, then I just wonder how deep will we come. So on a monthly basis, I've got what I wouldn't like to see, as I said to you, so this was an imbalanced price range. In December, we came down to here and we balanced this price range. That pretty much means price doesn't need to come this low. Okay, price doesn't really need to come down here. DXY, it's got an imbalanced price range. So I do wonder what's going to happen, and I'm going to be watching to start with. You've got a volume imbalance in there as well, just from that low to that high. See how it's got a gap. The bodies, that could be a draw for price as well. So there's a chance that DXY wants to come up into here. I don't know if it'd get up as high as the imbalanced price range because Euro has already balanced that price range. Okay, and these are inversely correlated. So personally, I think possibly DXY stays open in this range, but I wouldn't be surprised if it did come to there, because I realise that this is an imbalanced price range. The algorithm might want to come back up into here to reprice it. And when I say the algorithm might want to come back up, there obviously needs to be economic data to support this idea. It's not just, oh, well, I'm going to go up there because I feel like it. They'll use news events and inflation rates and the jobs numbers and all this sort of thing to get where it needs to go. And when it goes in the opposite direction of what people are thinking, people report saying, oh, it was already priced in, or the market had it wrong, or whatever it may be. So that's what I'm wondering how low we're going to come, right? So a monthly basis, you've got this here that's balanced, so I don't necessarily think it needs to come this low, but see the wick of this candle that's come down here. That's probably quite interesting to me, right? So from there up to the body, this level right here, what I can do that. Basically 108 pap on, I think 08052. So I'll delete that now. And that's the center of the consequent encroachment, you call that, of this wick. Now, if price came down lower, I probably would want to see this support price. I wouldn't want to see it close below here because I don't see a reason for it. Otherwise, my theory is completely wrong. I doubt we're going to come in this low. We have got this monthly imbalance in here, but again, on the higher time frame, we've actually got this balanced price range in here. So that should support price before it gets down into here. I think if it comes down to the monthly area, then the theory is completely wrong. So on a weekly basis, now as I just said, for like say a year's candle, I'm looking for open, high, low, close. It's also the same on a daily candle. It's also the same on a 15-minute candle. There's an open, there's a high, there's a low, there's a close. So all this is fractal, and what you're thinking about on one time frame, you need to overlap into other time frames. And this is why these things take a lot of time to learn, to understand. So in here on the weekly, what's happened, we had, well, a monthly imbalanced price range in here. What happened down here in October, we took these lows. So the only thing being seeked out by the algorithm is fair value or liquidity. So liquidity is like old lows where people might have their stop losses, and then inefficiencies are like, so they're between the lower here, the high of there. There was an inefficiency in this area. So, and as much as you see this happening, so this is a weekly fair value gap in here, okay? So there to there is a weekly fair value gap, bullish fair value gap. Okay, so it's green. So you'll see price came down into here, it closed inside this area, and the wicks came down into the imbalanced price range and balanced it basically. It also bounced off this bullish order block as well. Okay, so price then pushed higher. Now the draw is up here. This is the draw for euro, so that's where I'm concentrating on initially. So the question I'm looking at, and this is the economic calendar. So we've got ISM manufacturing, we've got JOLTS job openings, FOMC meeting, we've got the non-farm employment change. So there's some big economic data coming out right at the start of this month. So for me, unless I see anything crystal clear, I probably won't trade. I'll just wait to see what they're doing with this data. Or if the market opens up and shows me something, then I'll maybe be in a position to take a trade. Okay, but right now, I'm just kind of waiting to see. So I've already marked up on the daily. This was an imbalanced price range at some point. Price traveled through there, it came back down, it actually closed below, which isn't great, but it was coming into December, and then it pushed higher. So this balanced price range, you would probably want that to support price. So if price did come down here, you would want that to bounce out of there. This line was the consequent encroachment of that wick. Okay, so again, if it got all the way down here, I wouldn't want to see it close below here. There's this balanced price range in here that should support price. Okay, you've got a fair value gap in here. So it would maybe want to come this low, but then you've got to look at the hierarchy of PD arrays. So you've got like bullish order blocks in here on the daily. You've got bullish order block on the weekly. If I went back to the weekly, you would see that. So there's other things that probably should support price before it gets this low. I wouldn't like to see it probably get this low. But again, if I look at the 12-month candle, so we closed inside here. There's not really any inefficiencies for that. Okay, so I don't see, like, what you would sometimes see is an inefficiency where it's like, okay, well, that when it opens, it might want to reach down to reach for an inefficiency to create the low and then push higher. But there isn't really anything on any of these timeframes where you would say, well, that's possibly a draw. So here's that bullish order block I'm talking about. Prices moved higher than here, these two downs closed candles are a bullish order block. So I would like to see price come down into here, maybe at the start of this week, and then this sort of data that's coming out, I think it's going to be bullish. Okay, so I'm anticipating it being bullish, which means, and it's probably pretty crazy to think, but on a yearly candle, I think there might be a really small wick, stubby wick low on this monthly candle. Sorry, yearly candle. When we open here, I think there might just be a little stubby wick, and then it's a massive bullish candle in here. And that's because I'm looking at the lower time frames. I'm not really seeing anything that the market would want to reach for if there was example, so let's just say this month, December, and see this this weekly. Actually, let's say month. So when this opens, there's going to be this high from November. So if it comes down and hits there and then pushes away, that's a very bullish sign. That's what you call an immediate rebalance. So it comes straight down into here and then it wants to go. That's what I'm probably thinking is the likely scenario for this month. You're going to get the rundown Monday, Tuesday. The economic data is going to start to come out the rest of the week, and you're going to see this start to push higher because the data is getting better. And ultimately, if it doesn't happen this week, it's probably then going to be what I'm looking at would be, well, if that data that they're going to share with us isn't going to be their cover to go higher yet, then it could be their cover to push it lower into this area, the bullish weekly order block, and take it higher. But I don't see it coming for this fair value gap, to be honest. But I'm here to come up with a thesis, and then when the market starts to show its hand, I can then act on that. So that's the outline for kind of the year, but I'm going to wait to see how the market reacts, what it does, because it's the start of the year. I do, as I say, see it being bullish. I don't see much of a low being created before we push higher. So I'm going to be doing this every week. I'm not going to be going to this depth, and it probably won't be this long. So feel free to follow along. Hopefully you do. Hopefully you learn something. And here is to a successful 2024. Cheers.